Hi guys, Perry Power here. Welcome back to the channel. Now, we are going to be covering in this video the other 3 tips on what my wife and I had to do to secure our mortgage to buy our dream house. If you missed part 1, the link is in the description below, and that will take you through tips 1 and 2 on exactly what we had to do for our financial situation to secure a £341,000 mortgage to buy our amazing house. Now, without further ado, let's jump into tips 3 to 5, and let's go. So tip number 3 is really important, and it was really surprised me when I was advised this, is to cancel the low credit cards or the low limit credit cards. We've all got them kicking about in our wallet or in our purse. Maybe a Capital One card that's got 1,800 quid on it. You think, oh great, yeah, I'll put that in the wallet for a rainy day. But those low limit credit cards, they're classed as subprime lending, and that can really go against you when trying to apply for a mortgage. So if you can, just cancel them, cut them up, and then within a few months' time, that will show on your credit file that credit agreement's been cancelled, and that's great. It shows that you had credit, you didn't use it, and you got rid of it, so that's a really good thing. So tip number 4 is a really obvious one, and you're going to think, wow, Perry, no Sherlock, but I'm going to say it anyway, because so many people forget it. In the lead up to getting your mortgage, you've got to tighten up in your life. You've got to pull in the purse strings. Don't go on those lavish holidays. Go on just mediocre holidays. Stop eating out 4 times a week. Maybe have one night out where you eat out maybe once a week. So just tighten up. Lenders want to see a really good amount of disposable income at the end of the month. If you're smashing it on mad holidays, loads of eating out, massive high gym memberships, all this kind of thing, they're going to say, well, great. The mortgage they want to borrow is £1,000 a month, but they've only got £1,100 a month left at the end of each month. So you just got to tighten up, pull in the purse strings. So the 5th and final tip number 5, is to make sure you shop around. You've got to go and look at the whole market, not just going direct to your bank. Remember this, mortgage companies want new customers. You're never going to get the best rate from your existing bank. They want to dangle the carrot to new customers to bring new customers to their business. Their existing customers very rarely get the best rates. And if you go with the right whole of market, and I keep saying this, around a whole of market mortgage broker, they will search every single lender in the country, most of which you probably wouldn't even have heard of. So you've got to make sure that you shop around for the very best deal. Don't just look at 3 or 4 of the mainstream lenders, because there might be much better options for you with some smaller building societies and that kind of thing. And on that point of mortgage brokers, so there's 3 ways to get a mortgage ultimately. Walk into your bank, so that's direct to bank. There's an independent mortgage advisor who will search a panel of lenders. So that panel might only be 10, 15, 20 lenders. Usually that panel pays the broker the biggest kickback commission. So bear that in mind. And then the 3rd and final way, and the only way that I think people should do it, is looking at the whole of market by going to a whole of market mortgage broker. There's a link in the description below to Home of Mortgages, a company that I work with regularly, my clients work with, Power Bespoke, my estate agency recommend. They're a whole of market mortgage brokerage, really good service, and they will find the best deal. Some brokers charge you 0. They charge you nothing. Be worried about that, because if they're charging you nothing, that means they're getting a big commission potentially from the bank. Whereas if they charge you a small fee, but they're searching every single lender in the market who may not pay them a fee, you can sometimes have a situation where a broker is putting you with this company or suggesting you go with this company because they're paying the biggest kickback. Whereas this company, the deal over the term of your mortgage might work out better for you, but because they're not going to pay the broker a commission, the broker don't suggest you go with them. So remember that, just be very conscious of whole of market mortgage broker. So there's my 5th and final tip. Hope you found it helpful. Remember, this is not mortgage advice. This is just experience that I've had to go through personally. When we purchased our house, my wife and I, we borrowed at the time £341,000 to buy our house. We have a lovely house, we're very happy here. Our mortgages have been reduced, obviously, in the last 4 years. And I would always suggest you go and take independent mortgage advice regarding your exact personal situation. That was just our situation, in the hope it helps you along your way. If you found that helpful, don't forget to subscribe to the channel, click the bell icon so you get notified. I love sharing these tips and advice that I've built up over the last 20 years of working in property. And if my team or I can do anything to help you, I'll leave a link in the description to our book a call page. You can book a call with us, we can help you out, give you some advice, and wish you well. See you on the next video.